Hi guys, just a few seconds, and I'll just let the attendees all make their way into the room, and then we'll kick off the session. Hey Daniel, good to see you again. Another week, another dollar. Most certainly. Not if you're a Bitcoin investor right now. I'm sure everyone's seen the chart. I actually made a post on the FP Markets. Oh, you can't hear me. Guys, can you all hear me? Just let me know in the chat box, please. Y or N for yes. Okay, yeah, others can, Daniel. So I'm not too sure what's going on there. Oh, you can now. Fantastic. All right, cool. All right, let's get this started. So, as usual, a very, very warm welcome to from me and the FP Markets team. Thank you all for taking the time out of your day to join me today. So, look, I see some regular faces present, which is great. So, look, for those who are new, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. Look, I take it we can all hear me, as we've all verified just a minute ago. I just want to check you can also see the welcome slide. Just let me know in the chat box. If not, any issues on that on this side of things, do be sure to let me know, and we'll try and get you up and running. Right, for this presentation, the focus is on higher time frames. The higher time frames, as in position trading. Look, I am going to assume we're all familiar with basic chart features and basic technical analysis. If not, guys, do feel free to watch our previous webinars created by myself and my colleagues. Right, so as usual, let me just run through the disclaimer. Well, I'm not going to run through it. I'm not going to read all of the text, but look, the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. So look, essentially what this says is what we go over in this presentation is should not be viewed, excuse me, as any form of investment advice. As I say in every in most of my webinars I take part in, please always do your own due diligence in anything trading and investing. Now, for anyone that's new to the webinars, just a quick about me, I guess you could say. My name's Aaron Hill. I'm the technical analyst for FP Markets. So I've been involved in the financial markets for more than 12 years now. And look, I was recently I recently passed level 3 of the CMT, so now I'm a CMT, and on the basis of completing CMT level 2, I received the CFTe qualification. Certified financial technician. For me, the main focus is price action, Fibonacci, the relative strength index, and chart psychology. Right, so just bear with me. Bear with me, guys. Let me just, okay. Right, so, okay, look, this is an agenda, if you will. So first on the scales is an introduction to timeframes, right? So I included this section here as some newer traders will may not fully understand the meaning of time frame in the trading domain. Next up, I'll discuss whether there's a best time frame to focus on. Here I'll also be touching on what the most common trading styles, with the majority of the focus of course being on the higher time frames. But you know, the best time frame, I get asked this question so many times, what the best time frame to trade on? And my answer is always the same. The best time frame is dependent on a number of factors, and it's essentially trader dependent. You know, it's something that you can only decide yourself, going on your personal lifestyle and things like that. We'll then switch over to things, understanding the higher time frame direction and its use on lower time frames. Look, I actually know a few traders that do very nicely just trading the bigger picture, and they're very, very relaxed, and they operate a simple approach. So look, higher time frames also have use on the lower time frames, and this, which is something I try to show daily in my weekly and daily market analysis, which I will actually go through at the end to show you how I navigate the markets. Yes, Adam, depends on temperament as well. 100% there. 100% in terms of time frame. So it's a very personal thing, to be honest, and not really something I can answer for you. Look, although I've not got it noted on the slide, we'll have a Q&A session at the end, but look, feel free to ask me any questions as we progress if it relates to the content that I'm showing. Look, as in each webinar, I do like to try and cover each question, but if time runs out, please feel free to email me and the research team at marketanalyst@fpmarkets.com. And we'll get back to you as soon as possible. Look, alternatively, you can use the support@fpmarkets.com, but look, marketanalyst@fpmarkets.com is far, far quicker to get to the right people. Additionally, feel free to send over across your ideas, and the team will look at putting something together. Please also remember there is a webinar. There is a recording of the webinar that will be available through. You can find this either through the FP Markets website under the resources, or you alternatively head over to FPM's YouTube channel. Okay, so look, an intro to time frames. I'm not going to go too much into detail on this because it is pretty straightforward, and look, a simple Google search would usually get you up to speed anyway. Look, for those of you who are brand new to trading, a time frame simply refers to a period or a period, a candle or a bar opens and closes. On MT4, there are 9 time frames. This is the MT4 demo account. As you can see, there are 9 time frames plotted on this upper ribbon. So here we have the option. So as you can see, right now we have the daily time frame selected for the pound dollar. We could select the M1, the M5. This is the 1 minute time frame, the 5 minute time frame, and so on. But on the MT5 platform, which I don't have showing, but look, it's exactly the same as this. It's plotted within an upper ribbon, although you do have to, I believe, go to tools to show this, to check the box or something like that to show the time frames. Anyway, what they do is they have now 21 time frames available on MT5. Look, it is beneficial to have more time frames, I guess you could say, especially if you're a price action trader. But for me personally, these are enough. These are more than enough for me to operate with comfortably. Really, there's not much more I can say on the subject. So if there's any questions on the content, look, fire away. Okay, next slide, guys, is trading style. So what is your trading style? So look, ultimately, there are 4 main styles of trading that exist: scalping, day trading, swing trading, and position trading. The separating point between the 4 styles is time, or the length of time that trades are held, I guess you could say. So look, scalping trades are only held for a few seconds, or generally at most a few minutes. This is not for the faint of heart, guys. If you're interested in scalping, it's really not. Traders that fall under this umbrella So scalpers tend to take numerous trades each day. Now, I will point out that scalping is also defined as a market maker. So a market maker is someone that provides a bid and an ask price. So what they do is they buy at the bid. So they receive sell orders at the bid, and then they simultaneously sell at the ask. So what they're doing is they're scalping between the bid and ask price. This is just another definition you may come across. Day trading. So day traders are those traders that hold positions for anywhere from a few minutes to a couple of hours. The defining point really for day trading is that the majority of day traders do liquidate their positions before the close of trade, which is for me at 5 p.m. for all of us, 5 p.m. Eastern Standard Time, New York. Swing trading. So swing trades are usually held for a handful of days, sometimes a few weeks, or even up to a month at some points. You will find that swing traders favor medium-term timeframes. I will get to this in a minute. And finally, position trading, guys. This is the main part of this webinar. Position trades are held from anywhere from a few days to, well, at the extreme, several years. This can also be referred to as investing. Okay, right. So a scalper will typically watch the M5, the 5-minute time frames, and M1 time frames. Look, day traders generally tend to focus on the M15 time frames up to the H1 time frames. Swing trading is, as I said, more medium term. Generally focuses on the H1 and H4 timeframes, and even sometimes the daily timeframes. While position trading, as I said, it's more of an investment approach. This we tend to find that traders place emphasis on daily, weekly, and monthly timeframes. Now, as far as I've seen over the years, the appeal towards position trading continues to grow. Now, I will just say that what many traders, I'm sure you've all read, state that the higher time frames are more reliable. I understand why they say this, because what the higher time frames do is they essentially filter the lower time frame noise, if you will. But given I've been in the market for so long now, that I find the lower time frames relatively easy to navigate now. It's just, I believe also there's a lot of big players involved on the higher time frames, and hence it's more of a reliable picture. And look, with the higher time frames, you get a bigger, you can view a bigger picture of the trend, right? So on the daily time frame, you can see a clear trend, while on a 15-minute time frame, you'll struggle to see any type of trend that's linked to the bigger picture. So look, position trading. Now, as its name implies, position trading involves taking a position, as you can see, taking a position in a security or a currency pair, assuming we're talking FX here. The ultimate goal, of course, is to jump on the back of a major trend. Patience and discipline, of course, is key, guys. Look, guys, bigger picture. Focus. A position trader focuses on the bigger picture, so they tend not to focus on the market blips, if you will, meaning the minor retracements or minor fluctuations, as they focus on the higher time frames. As I'm sure you can imagine, the appeal to position trading is for those who work full-time jobs. Actually, having a full-time income can really help lessen the psychological impact of trading, as many full-time traders actually do need to make money. That's why you'll see some consistently profitable traders. Consistently profitable traders open YouTube accounts because it generates additional income, right? So that's why you'll see some consistently profitable traders doing that, and they also sell courses. Look, if you're a consistently profitable trader and you've been doing it for a number of years, why not try and help people I don't see anything wrong with that. What I do disagree with is traders that clearly cannot trade and they're trying to come across as they do trade, if that makes sense. I believe the industry is now flooded with that kind of thing. So just have your wits about you if you're signing up to any course or paying money to learn. That's not to say that you can't learn from a trader that doesn't actually trade. You can derive information from him or her, but it's just, for me, I prefer to learn from people that have actually been there and done it. So yeah, that's just my opinion, guys. So look, as I said, the position trader is ideal for those with full-time commitments. Also, swing trading. Swing trading is more. Is also ideal for those with full-time obligations. So as I said, you can trade the H1 or H4 time frame, and you can check it before you go to work, or check it when you come home from work. So twice a day, 3 times a day, maybe. And yeah, so it's really good. And obviously, this will lead on to less screen time, right? Look, how many? There's only a very small group of us that's actually got into this to sit at the screens all day, buying and selling. Many of us got into trading and investing because we wanted to have more time to do things, more time to, go to the places we wanted to go to, more time with our families, and etc. So many of us, and what happens though is when you do start your journey in trading, you find that you're spending a considerable amount of time at the screens, and it almost becomes a habit then, and then you're a day trader. So look, less screen time is a clear benefit of for the position trader. Position traders, look, this is pretty self-explanatory, but position traders often make a small number of trades, right, over the course of the year, keeping to only critical moves rather than the chop and change approach, which can obviously lead to less trading stress. How many of us here are day traders and do get stressed out at consecutive losses, losing trades? With a losing trade as a position trader, you'll have one loss, but then you'll have a break in between that naturally before the next trade appears. So you're more what's the word? Having the loss, experiencing the loss, you've got time to recover, if that makes sense. So I hope that really explains what I'm trying to get across there. Let me just see. Okay. Yeah, Daniel's made a very, very good point there. Unfortunately, there are a lot of scammers in this industry. If it was the same in healthcare, there would be a lot of dead people. Yes, a very good point. Yes, so it's a very good example, actually. So look, right, a clear downside to the position trader is, of course, exposure. While it's true that holding an open position in a market for a longer period does increase the chances of catching the longer term primary trend, being exposed to the market itself is inherently risky, right? So remaining active in a market for long periods of time increases the chances of experiencing heightened degrees of volatility and risk. So you by becoming a position trader, by becoming an investor, you're opening yourself to volatility and risk. Another downside, of course, is the opportunity cost, right? Holding a position long term requires a trader or investor to allocate capital for a substantial period of time. The initial capital outlay, the money required to facilitate a transaction, including margin requirements, of course, is effectively, it's off the table until the position is closed out. So that money is being used. This can lead to opportunity cost, where the trader or investor is unable to pursue other opportunities because sufficient funds are not available. Okay, best time frames. So okay, so we have a question here from Weber Neil. Following the last week's RSI lesson, I'm keen to hear RSI v ATR. So they're two very different indicators. hope I can just call you Neil. I think that's your name. The RSI is a momentum gauge, right? The ATR is a volatility gauge. So they're completely different. I assume the ATR, you're talking about the average true range. Look, they're completely different indicators, really. The average true range is a volatility concept, and the RSI measures momentum. The ATR can be used for a number of things, guys. It can be used to allocate your stop losses. It can be used as a trading stop as well. So there's a number of things you can use with that. And the RSI, as I went through on my previous webinar, has a number of methods and techniques. So look, best time frame. What is the best time frame to focus on? As I've wrote here, there is no one universal time frame applicable to all traders. So next time you ask someone what's the best time frame to trade on, understand that they're not going to have the answer for you unless you tell them, unless you describe your current situation, and then they can offer you a recommendation. While I would love to be able to direct you to a specific time frame and say, look, that's the time frame and that's the best option for you, it's just simply not possible without knowing your current situation and financial needs and objectives and things like that. So it ultimately depends on the individual trader's circumstances. If anyone here does know of a universal time frame suitable for us all, please do let me know, and I'll happily let everyone know in the webinar. Look, guys, we're all different. We all have different lifestyles and commitments, and this affects the way in which we approach trading. So as an example, look, having full-time commitments usually places you in the bucket of swing trading or position trading. As I've already shown, time at the screen is obviously limited. Though what if you do have spare time during the day? What would we do then? Say you work part-time or you're retired. Then day trading or scalping could be options. I wish I could provide a more defined answer to this, but which time frame and ultimately which trading style you should follow, it's really down to your personal settings. There's really no one correct answer applicable to everyone, as far as I know, guys. No worries, Neil. We have a question here. Do you have a PDF handout of all the slides that I can download? I'll just call you N. I'm sorry if I'm through fear of butchering your last name there. Look, what you can do is I'll provide my email at the end, and what I'll do is just send me an email, and I'll send over the slides for you. No worries. Daniel, I'll get to your questions in a minute. Just bear with me. So, okay. So, look, to help newer traders here, I thought it would be a good idea for me, it's worth running over the different trading styles that we come across in the trading domain. So look, swing trading. Let's start with swing trading. This strategy ultimately involves identifying, as the name implies, swings within a trend, then attempting to capture and profit from these swings. It is worth pointing out that the term trend can be confusing to some new traders. A trend is, look, guys, it's really important that you understand a trend is not only found on the higher time frames. The market is fractal, which means trends can be found on the 1 minute time frame right up to the one month time frame. It's really interesting. If you go from the monthly all the way down to the 1 minute time frame, you'll find trends. It's when all those trends align, that's when you have a really good opportunity. Look at the Dow theory. I think one of the tenets within that theory is he bases his trend studies on three concepts: the primary trend, the secondary trend, and the minor trend. So it's something to look up if you're interested in that. But for here, swing trading, I'm referring to the H1, H4, and daily time frames. So look, swing traders tend to look for strongly trending markets and trade the retracements and pullbacks. So a retracement being within an uptrend. So that's a retracement. So a dip buying scenario. and within a downtrend, a pullback, a sell-on rally. So a sell-on rally scenario. Right. So some of the downsides, of course, with swing trading is exposure to overnight and weekend gaps. Also, as you only focus on capturing these swings, traders can miss out on a lot of the profit from a trending market. So imagine the primary trend. Let me just draw this up for you. So imagine the primary trend. So we have higher highs, higher lows, higher highs, higher lows. What happens is you'll find swing traders tend to buy the dip here and potentially exit there, or exit a large portion of their position at this point here. So they're trading the swing. And if there's considerable resistance from this point, they could even short into the upward facing market and trade the swing to the higher low. So what it's saying is, by buying at this point and selling at this point, or selling most of your position at this point, you're missing out on the entire primary trend. Okay, so look, day trading. Day trading is day trading, as the name suggests, involves taking trades in a single day, usually based on some form of technical analysis. Day traders typically do not keep any positions open overnight, hence the term day trading. Scalpers and day traders also generally want account types with low spreads, as of course this enables more profits on their side, and quite rightly so. Some of the downsides for trading, of course, are, similar to scalping, is that you require relatively good timing. And it's not for the faint heart, guys. It really is not. But I've met some good day traders, and they're very, very calm. They're very, very disciplined, and it's almost like a boring procedure now for them. So I think that's what you need to approach if you're looking to become a day trader. And when I say day trader, I'm the person that really jumps out to me is my mentor. He was a day trader, and he was a successful day trader. So any articles you read that day trading is not successful is complete garbage, because I've seen it with my own eyes. And yeah, so it is 100% possible, but it's the mindset that really plays a big part of your trading there. Anyway, so look, I think I've gone over. Look, day trading as well as scalping can be emotionally taxing. I'm sure most of us here can attest to this. Watching your P&L fluctuate can really play games with you, right? So as short-term trading generally requires to be present at the screen, right? So you have to be always around your screen, if you know what I mean. One alternative, of course, is some traders have told me that they cover their P&L on their platform, so they don't watch that. But still, then you've got the pip count. So and then in your mind you're calculating the pip value. So it's just, you need to learn to regulate your emotions. Look, scalpers, just really quickly, guys, ultimately target minor fluctuations, entering the markets and exiting the market multiple times per day to build profits. You'll find that scalpers tend to work with an inverse risk reward. So for instance, their risk is $100, but they're targeting $50 or $70. Now, if you can do that consistently with a good win percentage, you'll make money. So yes, key attributes of a scalper is those who can handle stress and act under pressure, right? So it's pretty self-explanatory. Right, so that's really all I have to say. Let me just check if there's any questions on that. Okay, were you showing, Weber, Neil, were you showing a market screen, only your face so far? Really, guys, can you see my screen here? Just let me know, Y or N. Yeah, you can see the screen and face. Yeah, so look, I'm not sure what's going on your side there, Weber, Neil. Maybe it's something that's going on your side, because everyone else can see it. Okay. Right, guys, before I switch over to the charts, are there any questions relating to what I've shown? There really shouldn't be. It's pretty straightforward, really, what I've shown. Let me just prepare my. You look like you had a rough night. Thank you, Daniel. I actually feel quite fresh. All right, so let me prepare the charts. So look, as this presentation is focused on the higher time frames, I will now show how I view higher time frame movement. Look, in terms of price action, this largely consists of support and resistance, supply and demand, and trend line studies. Be aware, though, that it's not only price action strategies traders can use. We can use indicator overbought and oversold signals, for example. They're certainly worth watching on the higher scale. Also, many traders incorporate the US dollar index in their trading, which I can show if you're interested. For those of you who do not know what the US dollar index is, it's simply a weighted index, and it simply compares the value of the US dollar against six international currencies: the euro, the British pound, I believe, the Japanese yen, the Swedish krona, the Swiss franc, and there's one more, the Canadian dollar. But the euro controls the largest value within that index at around 58%, I believe. So also, just to be clear, most position traders may sidestep the lower time frames and focus solely on the bigger picture to analyze and take trade, which is fine. That's a position trader, right? Here, what I'll show you now is how I blend higher time frames and lower time frames together. So what I do is I use the higher time frames to gauge the bigger picture movement, which can then be traded on the lower time frames. For anyone that follows my daily market analysis, you will see this on a daily basis. So if there's no questions, okay. Shabu, I'm so sorry if I've butchered your name there. How do you use the higher time frame advantage over the smaller time frame? I will show that in a few seconds. A bit off topic, are there any books you would recommend for day trading based on pure price action? Let me get to that in a minute. Let me have a think about that, because most of my study really come from talking to professional traders. So I didn't really read much. The first book I actually read was Darryl Guppy, just a book that was given to me. And then I read so many books, I've actually forgotten the books I've read. So look, and then I really went into the CMT, which is the Chartered Market Technician, and I read a load of. So look, Edwards and McGee is a good one, a very good one. But based on pure price action, I'm not too sure. There is a gentleman called, there is a doctor, an ex-doctor, I cannot remember his name, but he was really into price action on the lower time frames. I can't remember his name, but I used to watch him a fair bit on YouTube. Okay, so let me switch over to the charts, and just let me know, guys, if you can see the screen so I'm not talking to myself. Bear with me. There we go. So I'm now on the TradingView platform. Just YRN in the chat box, guys. Van Farp is a very good one as well. Yes, Adam, good point. But again, guys, look, it's okay reading all of these books, but the best teacher is really finding someone that actually knows what they're doing and can show you and can really spend some time with you, because price action is not just candlestick. That's the one. Al Brooks. There we go. Al Brooks. Yes, he was someone I watched and quite admired, really, because he was a doctor. I think a really high level doctor, and he became a trader, a short-term trader, surgeon. Yeah, and he's someone I watched a lot, but I don't really use any of his techniques. Though, look, there was one trader that was really had a huge impact on my life, and he was. I would say he's a complete genius at price action. And I'm not going to give you his name because it's very personal. He's a friend of mine, and he's not willing to teach anyone. It was just luck that I was a friend of his, and it's just insane what he can predict from the charts with no fundamental analysis. It's just insane, and it was very, very much based on the psychological component of buyers and sellers, right? So he would have a very good indication of where traders would be looking to buy and sell, where their stops would be, and he would take advantage of that. And I've never seen anyone trade quite so, as effectively as him. And he was such a relaxed guy as well. So yeah, the only difference is because he was not a native English speaker, the communication between me and him was very difficult, although I did try my best to get as much as I could from him. And I've really taken a lot of his ideas into and incorporated it into my own trading. He was almost like, I dare I say it, he was almost a trading god. He was just incredible, just absolutely better than any famous trader I've ever seen. He was incredible. Absolutely, he is incredible, to be honest. But yeah, so look, so how I view the time frames is a little bit different, I guess. And I do incorporate, as you can see here, I do incorporate a number of technical components. Look, let's just start with the euro dollar, right? So the euro, this is the weekly time frame here, guys, and this is the daily time frame. Okay, so weekly, daily. Let me remove the crosshair so it's easier for you. Weekly time frame, daily time frame. As you can see on the weekly time frame, this is all that I've really shown in my markets analysis. We have been in a clear downtrend, a decisive downtrend since the beginning of 2021. We can all agree on that, right? It's pretty obvious. You could stick a 5-year-old in front of this chart and ask him which way, him or her, which way the price is going. You know, I'm pretty sure they're going to say down. So, but look, what you can do then is you can really go out to the higher time frames. Look, it's clear that the euro dollar has been on a downside, has exhibited a downside bias. So it's trend studies, right? So I focus on trend studies as my first port of call. So we know so what happens here? Let me just expand this chart. As you can see, this is the weekly time frame really expanded. So we know we've been in a clear downtrend since, I think it's since 2008, right? A clear downtrend, clear long-term downtrend. So what is happening right now? Why? So this is the pandemic low. This is where we bottomed out when the pandemic hit. And look what happened. The euro continued to rally and we broke this lower high, which for many trend study traders is it's a bullish sign. We are likely to continue higher, and we did. We formed a higher high, a higher low, and we continued higher. But all this was for me was a pullback within the overall trend. But many were saying the euro is trending higher. And I get it. I do get it. But if we broke this high there, because we formed a low, high, higher low, and if we continued higher, then I would agree. I would 100% agree with you that the trend, the long-term trend for the euro is higher, but it didn't. What happened is it topped at this supply and then continued lower. Now, for anyone that follows my analysis will note, I can remember talking about the euro up here and saying, look, it doesn't look good for the euro right now on the weekly time frame because look, we've broken a steep trend line resistance. We've broken clear higher lows, and we're now testing the underside of a key resistance area at 1473, 1583, right? So everything was telling me, okay, the euro is potentially going down. Now, once we broke this support here at 1174 and retested the level, and I think that was a shooting star. No, it wasn't really a shooting star. I wouldn't call that a shooting star. But look, we rejected this level strongly, and we've continued lower ever since. Now, bear in mind, I didn't expect the euro to depreciate quite as quickly as this, but it has. And it's almost like a cliff fall, right? So we've just literally jumped off a cliff at the moment for the euro. Now, we know this, right? So once price was hitting these Quasimodo supports at this point here, these are Quasimodo supports. Anyone that's interested, we do have webinars coming up on Quasimodo supports, by the way. So Quasimodo supports at this point here, and price was testing these areas. Now, given the lack of bullish showing from these Quasimodo supports, I knew that there was a very good chance that the sellers were still likely in control. As you can see, this did happen to be correct. But this is the weekly time frame, guys. Remember that. This is the weekly time. So there's only one time frame. Now, if you're a position trader, you may use the daily time frame for entry. Now, what have we got going on the daily time frame? So I'm sure you can see we had a bearish flag form, and we've now broken out. As of today, we are down 0.8% on the euro dollar, and we have broken out to the downside of a bearish flag. Now, a bearish flag is a continuation signal, and a solid breakout to the downside is a strong signal. In line with this, we also tested the underside of the pandemic low at 0.638, right? So look, more signals. Well, what we're doing is we're building a case here. So from the weekly time frame, we've built a case that's clearly in a downtrend. Obviously, we're not God. We can't predict the future, but we can just work with the what the market is telling us, and then weigh up the odds of a continuation lower. So look, with everything included here, the bearish flag, the test of the pandemic low, the break of this pandemic low was pretty significant for me. So we convincingly broke below it, and we convincingly retested the underside of it. And I think we formed a bearish outside reversal. All of this really told me that we were breaking out to the downside, and in this case, I was correct. But there are times I am wrong. Of course, we all are. This is the nature of trading. Right, a bull trap. So where's the bull trap, Daniel? Tell me where the bull trap would be. Let me know where the bull trap is, because you said bull trap when the euro rose earlier. Look, I don't see a bull trap. A bull trap is when a bull trap is essentially a fake out, right? So if we look, I'll show you an example. If I find one, I'll show you an example of what I see as a bull trap or a bear trap. So anyway, we know where we are on the bigger picture, right? So we have the weekly time frame, the daily time frame. We're completely bearish at the moment. Look, we do have the RSI. I do have the RSI plotted to the daily time frame. We did have some bullish divergence, some early bullish divergence forming. Was I too concerned about this? I think I noted it in my market analysis. I'm not 100% sure on this. It's early, and given the bearish indications from the charts, I don't hold much weight for this bullish divergence. Now, I did say that anyone that was at the RSI webinar presentation before will know, to confirm a bullish divergence, we could look for a failure swing to a bullish failure swing, or a close above the 50 center line, which is this level here. We haven't got that yet. So look, we are still bearish for me. Right. Okay, so these are the lower time frames. This is the H4 time frame and H1 time frame. Now, I think I noted in my market analysis that I do not see the euro coming above this prime resistance at 0.680, 0.640. I think 0.680, 0.640. And look, we did test this area beautifully. And what happened? We also had a 1.272% Fibonacci projection, as well as a 38.2% Fibonacci retracement. So we had some strong, look, we had all of this confluence, right? This is working from a top-down approach technically. So we know from the weekly time frame, we are considerably bearish. We know from the daily time frame, we are bearish. So this prime resistance on the H4 time frame was an ideal shorting opportunity. An ideal shorting opportunity. And we tested this level. Let me just zoom in to the pip, I believe. We missed, yeah, look at that. We tested the area to the pip. Now, this was all before the event, guys. I'm not cherry picking this or anything like that. This was all before the event. And I said that we could see a relatively good rejection from this area. And look at the rejection. Look, for any candlestick enthusiasts, we had a shooting star. Look what happened to the shooting star. But look, if you're just trading one time frame, right, and this is all you saw, and look at what you'll be doing is in your back testing, be wow, look at this shooting star. Shooting stars are awesome. Look at the bearish follow through that emerged following this. It's not the case. You need to really understand where you are in the bigger picture to trade the lower. Look at the pound, the euro right now. It's just insane. Anyway, so we are, look, and if you really wanted to go even lower, look, this is the H1 time frame. So here's an example of what I would say is a bull trap. So I did note in my market analysis that I was watching the 106 level, right? So the reason I was watching the 106 level is because it's a psychological level that many traders watch. And look, the bigger players, they know that these are watched levels, and by extension, these levels do attract orders and stop orders. So what happens is you'll have traders that are trying to short this level, and they'll have their stops placed above here. But what you'll also see is above here, you'll see a gathering of breakout buy orders. So all these buy orders within this area. So what I try to do is look for an area of where price could potentially fake this round number, fake it into an area of resistance and pull lower. And this is what a bull trap would be. So we fake out. So it's a bull trap. It's a trap for the bulls, right? Breakout bulls above here, and they're trapped and they're in pain and they're going to liquidate their position. So once they liquidate their sell position, they liquidate their buy position with a sell order, don't forget. So when they buy above here, they have to liquidate by selling, and this adds to the momentum to the downside. Now, unfortunately, we did not see price go for the 106 level, but I did say in the market analysis yesterday, I believe, that if we leave this 106 level, we could be breaking, and we break out to the downside below 105. Be prepared for a possible breakout bearish scenario. Look at that. That is incredible. And this is all just from navigating all of these time frames. All right. So yeah, it takes time. It takes some experience. I get that. But look, it can be done. And yeah, so I hope this has really helped. If you're just a position trader, you could just look at the weekly time frame and trade based off of the daily time frame. But if you're like me, the higher time frame gauge, and then you're looking for lower time frame selling opportunities. Okay, onto the Aussie dollar. Now, this is another cool chart. So onto the weekly time frame, as you can see here. I'm sure you guys can see this. I'm sure of it. This is a prime support, and this is capped downside since the 28th of September 2020. But look at the trend, guys. Look at the trend. A lot of traders, I saw so many traders saying, buy the dip, buy the dip. So as price is correcting from here, buy the dip. And they looked like they were going to be right for a little while. And look, they could have well been right, but I just looked at the overall trend, very similar to the euro. Since 2011, we have been trending lower. So the pandemic low at this point was a deep pullback because we did not break the clear high, lower high at this point. If we did, then for me, it is a bullish market, but we didn't break it. What we did was this prime resistance was key and prime support was key. So while everyone was buying the dip at this point here, buying the dip within this pandemic move higher, the Aussie dollar's going to the it's breaking through resistances and lower highs and things like that. I did note that we could see a nasty sell-off at this point here, and we did. It's nice being right. I get that, but I'm not always correct. That's the way of trading, right? So we try to make as much as we can on our winning trades and manage our risk as best as we can on the losing trades. Anyway, so we sold off. Look at the sell-off from this area. And now prime support, 69.48, 72.42 weekly time frame has given way. Right, so we have given way. If anyone's seeing anything different on these charts, do let me know, because I'm open to different ways of seeing things. And look, daily time frame was confirming this bearish action, right? We had a Quasimodo support term resistance that was retested yesterday. Look at the rejection. Look at it. It's just telling you that the bears are in control here. And this Quasimodo support at 69.01 is unlikely to hold. And look what happened. And look, everything is just telling me that the Aussie dollar is in a lot of trouble right now. The RSI failed to come above the 50 center line and has now dipped back. We could see some minor divergence pop up here, but given the bearish flow right now and room to continue lower on the weekly time frame, I just don't see it right now. Look, here's a perfect example. I think it was Daniel. Perfect example of a stop run. And this is something I was highlighting in my analysis again to be wary of. Right, so we have the H4 time frame at this point. We have a Quasimodo support term resistance at 70.50. I noted that as a potential overhead barrier should we react from this H4 support at 69.24. As you can see, we did. We hit it, but we missed it by a pip, I believe, here. But what you can see on the H4 time frame, again, this H1 time frame, the H4 support here, same as here, guys. But look at this. What's this number? This round number here. It's a very, very widely watched psychological number, the 0.70 cents figure, right? How many traders were going to be looking to fade this area? And this was right when the US CPI release yesterday came about. So look, as you can see, we are in a downtrend, right? So what are traders going to be looking to do at this 70 figure? We all know, right? We know they're going to be trying to fade this area, either sell it or buy the breakout. Look at the pain caused here. We broke above, tripped all of those sellers, trapped all of those buyers, and then come back down. What they'll do again is they'll try to short here again, place their stops. Just it's ultimate chaos. But look at this resistance. It's hidden. The decision point. This was a decision point because it was a clear, decisive move to break above these highs here, and it was untested. And look at this. It was a decision point turned resistance area, and look at this area. It's just an ideal area to fake into, right? We've not only got the round number and stops above here and all that chaos, we've also got these highs here. So what you'll see is a lot of traders, they'll have their stops. They'll think they're safe above here. They'll think they're safe. They have their stops above here, thinking that that they have this resistance there, and they have this, I guess you could say, supply, but then they'll have their stops just above here from this hidden demand turn supply, if you will. It was just a picture perfect whipsaw, a bull trap, if you will. The pain caused here was just unreal. And look, we've continued lower. Look at the risk to reward on this. Look, and just to add to this, the H4 resistance, H1 resistance at this area here was also combined with this Quasimodo resistance, support term resistance on the H4. So look, all the confluence was there. All the ducks were lining up, if you will. Yes, at the end, I'll hand you my email for the slides. No worries. So any questions, guys, on the way I look at charts, let me know. We're nearly coming to an end now, and I've not had many questions. So if there are any, please do let me know. I just want to quickly have a look at Bitcoin for anyone that's watching Bitcoin right now. So this is not so much of a multi-time frame approach or a position trading approach, but look at Bitcoin right now. It's just in the agony. So Roberta, you're a short. 1 second on the Aussie dollar. Wow, where did you get in on the shorts, Roberta? Tell me the level, please. Yeah, Bitcoin's just really quickly. Bitcoin's been on a tear. Have you seen on Twitter? Everyone's panicking about the 30K handle, but completely forgetting this clear support at makes no sense to me. Completely forgetting this support at 28,849. Now, I did say that if we break this support on the daily time frame, we could then be heading to around the 20K area. Just my opinion, guys. Just my opinion. Of course, Bitcoin could rally from here and rally to the moon. But look, clear trend studies, right? You have a higher high, higher low, higher high. Oh dear, there's no higher low. All right, we had a few times to come in for dip buyers coming in. But look, if we break this, convincingly break this higher low plus this support, this is a concern technically for anyone that's along this market. This could actually be a nice shorting opportunity down to the 20K area. So Roberta got in at 69,539. What was the base? 65,539. I'm just 69,539. Okay. So you're sitting pretty comfortably at the moment then, Roberta. What was your basis for getting in on, let me know how you, what your basis was for shorting at 69,539, please. So you shorted around this area here. Must have been very low time frame, right? Or something like that. But look, you're doing very well. It's up, it's down. Doing good. So I have a question here. Is it a good time to invest in Bitcoin, or should we wait for, I cannot give you my investment advice. I cannot, unfortunately, but all I can show is what I'm seeing on the charts, and that is we don't look very good right now for Bitcoin if we take out this support. Just my opinion, guys. The Bitcoin is a very difficult beast, in my opinion. Look, Roberta, if you can just let me know how you got in on the Aussie dollar. I can't really see it on my charts. So Daniel, you had a friend who bought in December. Oh God. December of 2021, I guess. Oh, that's a painful ride. That is painful. It's a very painful ride. Ooh. Yeah. So, I mean, yeah, I'm not going to really comment, but we do have some bullish divergence on Bitcoin. But whether this bullish divergence is going to stop this, so you can see the RSI bullish divergence here, right? So, whether this is going to look, I do believe buyers will try to come in from here, try to defend this area, because this is a key area, guys, a real key area. Look, there's very little here in terms of structure. If we break this, it's not looking good. Ah, thank you. Yes, because let me see this. Thank you, because I saw a candle that touched the resistance and went lower. I didn't invest so much because I'm beginning, but I hope it will go lower. There's no room for hope, Roberta. No room for hope. We're technical traders. We base our analysis on probabilities, and that's all we can do. No room for hope. That's what my mentor always used to tell me, and it's stuck. So because I saw the candle touch resistance, okay, let me go back to 69,539 around there. Okay, you've gone really lower time frame there, haven't you? I think with the Aussie dollar. Look, fantastic. Look, we've broken it. Technically, it looks like we are heading lower on the Aussie dollar. I don't see anything stopping this until we get to around the potentially. This is fresh analysis, guys, because I haven't looked at these charts yet. I will do this later tonight for my analysis. But look, it looks like we are heading lower unless we do form a bottom off this Quasimodo support on the daily time frame around the 69.01. So as long as we remain below the 69 handle on the Aussie dollar, it looks pretty good to me. No, Roberta, your English is fine. Good trade, by the way. Good trade. All right, so guys, I'm going to switch things back to my slides. Okay, right. So this is where it comes to an end, unfortunately. So look, guys, upcoming webinars. Look, we have a really good webinar coming up. Position sizing. Understand how to correctly calculate your currency trades. I'm betting how many of us here rely on calculators? How many of us here rely on calculators? Which is fine. There's nothing wrong with that, but it would be good if you knew how to correctly calculate your currency, the position size on your currency trades, and you'll be amazed how simple that is. Now, that webinar is on the 19th of May, and at the same time, guys, so please be sure to. This will probably be a shorter presentation than normal because it's only position sizing we're looking at. And look, position sizing is a key element to risk management and money management. And then on the 26th of May, we will be deep diving into basic chart patterns. So basic chart patterns like our euro dollar. We've just looked at the euro dollar, the bearish flag pattern. Again, same time, guys. Always look, guys, please do use the emails if you're unsure of anything I've shown or talked about today, or if you have any suggestions. Please do send, as you can see here, please do send them to the support@fpmarkets.com or the market analyst at fpmarkets.com. Also, be sure, look, the FP Markets Telegram channel. I'm pretty active on that channel, and so be sure to sign up to our Telegram channel for performance posts and some potentially good setups. So look, let me just check if there's any questions I've missed before I. Excellent. Okay, no questions. Look, as I said, how do I join the Telegram channel? Just look, shake, look above, and you'll see the link. Just look above your post and you'll see the link in the chat box there. What do I think about the crypto Luna? I'm not going to comment on that, to be honest. I purposely avoided that chart because it would be a painful for my eyeballs, I believe. So I'm going to leave that for now. It's everywhere, right? You can't get away from it. So yeah, I'm going to leave that one for now. Yeah, so right. On that note, guys, look, I hope this has been beneficial for you, how I analyze the markets, how position traders may look at the markets. And I really hope you took something away from it. As I said, any questions, any comments, fire away to those emails, guys. Look, have a fantastic day. And I'll catch you all very, very soon. Thank you so much for your time.